Well, guys, Tesla has done it yet again. They absolutely destroyed analyst estimates in their fourth quarter earnings, and as a result, the stock continues to climb to new record highs. And as a result of that, I'm seeing a lot of people, including some of the media and analysts, asking the question of whether Tesla stock is currently in a bubble. Now, full disclosure, I do actually own Tesla stock myself. It's about 13% of my portfolio, and I am currently up close to 200% on that position, despite owning it for actually less than a full year. So you can probably see why that question is getting asked a lot, and I myself am actually getting asked a lot by my viewers to share my thoughts on Tesla as more of a long-term kind of growth-oriented investor in the stock. So in today's video, I'll quickly give my thoughts on those most recent earnings. We'll take a look at how much the stock has climbed and how high the valuation is right now. We'll do a quick refresher on their future potential, and then I'll finish up the video with my overall conclusion and let you know whether I think that Tesla stock is in a bubble right now or not, and what I personally plan to do with my position going forward. So I hope you guys enjoy this. It should be a fun one. If you do, make sure you hit the like button, really helps the channel. But we've got a lot to cover today, so let's just go ahead and jump right into this. And let's start by taking a look at the stock and that high valuation. Okay, so as you can see here, the stock climbed by another 15% this past week, which was mostly fueled by a 10% rally on Thursday, following very impressive earnings that helped lift the stock to new record highs. And we'll come back to the price and valuation in just a second, but for the fourth quarter of 2019, they beat analyst estimates on both earnings and revenue by very significant amounts, as you can see on this screenshot here. For the full year, it means that sales climbed by 14% year over year, which is technically a slowdown in growth, but this was really a transitioning year for them as they shift their main focus away from selling higher priced vehicles like the S and X over to ramping up development and or production of their mass market vehicles like the Model 3 and Model Y, which are a lot cheaper. But according to Yahoo Finance, that growth will reaccelerate in 2020 and 2021 to around 31% and 26% respectively, which is obviously due to the launch of the Model Y this year, which is a crossover SUV targeting the largest vehicle segment in the world. And to be honest, I actually think that their growth can still surprise to the upside, despite already being so high, as I think that people are still probably underestimating how well the Model Y will sell. And we'll talk more about their growth prospects in just a second, but I just want to quickly go back to that report from CNBC, as they noted that Tesla also stated that they expect to report not just positive cash flow going forward, but even positive net income on a continuing basis, with only possible exceptions when they launch new products and have ramp up production for them, which may be understandable depending on the situation. And I just have to say that this really reminds me so much of Amazon, which is my second largest stock, because every time that Amazon starts reinvesting in their business to fuel higher growth, I'm always seeing so many people freak out about it and freak out about their profitability and their valuation. And I just think that's a bit short-sighted, because if this was a company that was no longer growing or their business had peaked, then yeah, the primary focus absolutely needs to be valuation and profitability and things like that. But when you have a company like Amazon that is already dominating so many different markets and is still growing at insanely high rates, especially for their size, then you have to realize that they're doing it to become more dominant now so that they can rake in much higher profits in the future. So that's really a criticism that I tend to have about so-called value investors, because a lot of times they focus just entirely on the valuation and on profitability, and they tend to be a little short-sighted and they kind of miss the long-term picture. So I really think that you need to have more of a balance of everything to have that complete picture, and that's what these comments from Tesla really remind me of. And to be honest, I really like these comments because I think it's true. I think if they were to launch more disruptive products in the future, then they should absolutely focus more heavily on that right now, gain market share, disrupt the market, become more dominant, and then in the future, you can focus more heavily on profitability when the time comes. But even still, this is clearly a company that is already becoming much more sustainably profitable, and that's a huge deal for Tesla, because that's always been the ultimate bear thesis from short sellers, is that this is not a sustainably profitable company. But that is clearly no longer the case. So all of these kind of short sellers and bears really need to find a new angle to attack Tesla, because this is clearly a profitable company now. In fact, they've now reported reported positive free cash flow in 5 of the last 6 quarters, which is a really big deal because this is a company that is literally just getting started and are in the very early stages of growth. In any case, the result of these much stronger fundamentals has led to the stock climbing to new record levels and a rising valuation to go along with it. In fact, it was only about half a year ago that Tesla was trading for less than $200 a share, yet today they trade for over 650, which is a climb of almost 270%. That's pretty crazy. And that's also led to the stock having an average price target from analysts surveyed on Yahoo Finance that is close to half the current price. And differences that large are usually reserved for bubble territory stocks, which explains why so many people are feeling concerned. Now, during the earnings call, Elon Musk did sort of address this by taking a shot at analysts, saying that individual investors tend to have deeper, more accurate, and overall better insights than many analysts. And being one of those individual investors myself, I definitely agree with him on this point, as I just feel that most analysts are either corrupt or just lack any sort of kind of long-term vision, as they are mostly focused more heavily on short-term gains so that they can look good for their clients at that moment rather than focusing on the long-term picture. But as much of a Tesla bull as I am, I have to be fair to the bears here and admit that the valuation is in fact pretty high, especially when compared to legacy auto manufacturers. When looking at sales, their price to sales ratio is just a little less than 5, which is pretty high for a PS ratio, although it has technically been higher in previous years as they're still slightly below their 5-year average. But when compared to legacy auto manufacturers like GM and Ford, the difference in valuation based on sales is pretty staggering. And the same can be said when looking at profits, as Tesla's forward price to earnings ratio is close to 50, while Ford and GM are only around 7 and 5 respectively. But this really brings me back to the points that I've always made on this channel, which is that these are not fair comparisons to make because Tesla is much more of a long-term growth company, while these other legacy players like Ford and GM continue to see their businesses decline. And that growth and future disruption that you get from Tesla should be commanding a premium, in my opinion. In fact, in 2019, Tesla was the only company of the three that actually grew their sales, while the other two had large drops of -3% and -7% respectively. And in 2020, GM is expected to bounce back a little by 6%, but Ford will still be negative, while Tesla will skyrocket to 30% growth. And the same can basically be said about profit growth, given that EPS for both Ford and GM are both expected to be negative on average over the next 5 years, while Tesla is not only positive, but by an immensely higher amount too. So you're essentially left with a situation where Tesla is really growing into their valuation, while legacy players are being forced to develop electric vehicles just to remain relevant and keep their businesses from deteriorating. But if they really, because they waited so long, if they really want to compete with a company like Tesla on things like range, performance, technology, and also price, then they're most likely going to have to sell those electric vehicles at a loss while also cannibalizing their ICE vehicle sales, which have historically been how, obviously how they've raked in all of their profits. That's their high margin vehicles, while their electric vehicles are extremely low margin, if not negative. Meanwhile, Tesla doesn't have that problem at all because they're already selling their vehicles for a profit. They continue to disrupt the market and they don't have to deal with any of these issues of cannibalization because they don't sell any ICE vehicles themselves. They've gone full in on electric vehicles and autonomy, which is the future of the market. And look, don't get me wrong, I'm not saying that these legacy players would just disappear and no longer be relevant at all. I actually think that a lot of them will adapt and will eventually become competitive, but I still think that Tesla has such a lead that I think that they will continue to remain dominant as the market leader in electric vehicles and in autonomy. So in my opinion, when looking at all of this, I think you can't really judge this stock as a bubble by just the valuation alone. I think there's other things that you also have to take into consideration, like how well Tesla is performing right now as a company, what their future potential looks like, and how much you yourself, believe in them as a company. And as an investor, how do you feel about them, and whether or not you think that they will make a lot of mistakes going forward, and if you think that, these legacy competitors will just kind of rise up and destroy Tesla. These are questions that you kind of have to ask yourself as an investor when trying to evaluate whether Tesla stock is in a bubble right now. So let's go ahead and transition now to the progress that Tesla is making as a company to see if this valuation is justified at these levels, and also where I think Tesla is headed in the future. And then I'll finish up with my overall conclusion and let you know what I plan on doing with my position as well. Well, during their earnings release, they mentioned that not only is the Model Y already in production and is set to launch in March of this year, which is like literally just a month or two away, but that it will also have better range than they had previously stated. And this is something that I've been saying in a lot of my videos, is that because Tesla is so far ahead of the competition on things like range, performance, and price, like when all three are considered, and because of their lead in research and development, coupled with the very strategic acquisitions that they've made in companies like Maxwell and Highbar, that it will only lead to further developments in things like battery technology, and the competition will obviously struggle to keep up. And as a result, the battery range for these first higher price versions of the Model Y will start at 315 miles, which is a very big increase from the 280 miles that they previously announced about a year ago when they officially unveiled the crossover SUV. In other words, it took them less than a year for them to increase the range by 35 miles and over-deliver on their promise, which is something that I suspect Tesla will continue doing with future releases. Again, this is important because the Model Y is targeting what is by far the best-selling vehicle class in the world, but will also need to compete against upcoming electric crossovers like the Ford Mustang Mach-E. Well, speaking of which, the highest range version of the Mach-E can only get about 250 miles of range, so about 65 miles less than the Tesla, yet it's actually more expensive. And the more common and cheaper versions of the Mach-E will do even less at around 210 miles to 230 miles. In other words, these legacy players are really struggling to compete with Tesla, and it's definitely showing. Meanwhile, Tesla is already developing other products to further disrupt these legacy players, like a new electric pickup truck that, in my opinion, is more of like a hybrid between a truck and an SUV, and it'll start at less than $40,000, but still get over 250 miles of range. And since it's not going to go into production until a couple more years from now, I expect the base range to actually go up in the future. But even if it doesn't, there will still be other versions that will increase the range to as much as over 500 miles, although it will cost, significantly more. But still, at less than like $70,000, you really get a lot of bang for your buck, as it'll come with essentially supercar acceleration of less than a 3-second 0 to 60 speed, 3 motors with all-wheel drive, and a monstrous 14,000 pounds of towing. I actually did reserve a Cybertruck myself, and I've never even cared about owning a truck, and I've heard a lot of people say the same thing, but that's probably the reason why my girlfriend wants me to cancel it. But anyway, she's not the boss of me, so I'm gonna keep it. In any case, I wasn't the only one interested, as it literally recorded hundreds of thousands of reservations in just a few days after unveiling. And during the earnings call, Elon Musk gave an update on the Cybertruck, basically saying that he's never seen this level of demand before, stating that they will likely sell as many units as they can make. That would be a big deal. Which, speaking of EV sales, Tesla now expects over 500,000 vehicle deliveries in 2020, and I think they will easily beat that number, considering that they already delivered over 112,000 vehicles last quarter alone. And in their earnings report, they show that their capacity in Fremont, California for just the Model 3 and the Model Y will reach 500,000 by mid-2020, with their newly built Shanghai Gigafactory out in China expected to add another 150,000 units plus of capacity as well. But we'll come back to China in just a second, because we should talk about the whole coronavirus situation, because that's an issue that could actually affect them, at least in the short term. But on top of all of this, they've also already signed the contract for the Gigafactory 4 out in Germany, which, by the way, Electric reports that access road construction can already be visible. And also in that earnings report, they also mentioned that the factory could start pumping out vehicles as early as next year, which would be a really big deal, since Europe as a continent is the second largest EV market in the world, only behind China, but ahead of the United States, at least in 2018. And look, none of this is even considering other absolute game changers for Tesla, like their upcoming 2020 semi truck that will compete in a heavy duty truck market worth over $100 billion globally. And if they were to make some like strategic acquisitions or maybe some partnerships to actually handle some of the logistics themselves, Tesla could potentially even tap into the overall freight market that is worth close to $800 billion just in the United States alone. That's a huge, massive market. Obviously, that is complete speculation on my part, but knowing how ambitious Tesla is, I honestly wouldn't be surprised to hear like Elon Musk bring it up at some point in the future. In fact, nobody was expecting Tesla to develop a robotaxi service, and yet we know now that they're very, extremely serious about disrupting that market as well, which by the way could fuel the autonomous driving market size to grow to literally trillions of dollars according to ARK Invest. And finally, everyone seems to forget that Tesla also has really big ambitions for their energy business, especially with their Megapack and Powerpack energy storage products that will target large-scale commercial operations, which also helped them reach record energy storage deployments in 2019, which was more than all previous years combined. Now, there are actually some things that could get in the way of Tesla continuing to outperform, like maybe them making some fundamental business mistakes, or if profitability goes down again and they really kind of struggle to sustain it, which by the way, we all know that vehicle sales always crash in the first quarter of the year, just in the kind of broader market overall because of seasonality, but because the mass media hates Tesla so much, since they don't really like spend any money on advertising, and some of the media can be kind of corrupt and the way that they're kind of sponsored by big legacy players, they tend to use those drops to spread nonsense about Tesla not having any demand for their vehicles, which led to a huge like major sell-off last year. And I can't really complain about that because it was a great like opportunity for me to really build up my large position, but it's still something that should be noted as a possible hurdle for Tesla here, at least coming in the next quarter. Now, in any case, on top of all of that, there is still the whole coronavirus situation going on that is only getting worse every single day and has already claimed over 300 lives and infected over 14,000 people, according to the New York Times at the time of this recording. And that's led to companies in China shutting down for a while and sending employees home to avoid contracting the virus. And obviously, that's a big deal for Tesla, who is just now entering the market in a meaningful way with their new Shanghai factory. Now, Tesla did comment on this during the earnings call, but they said that they are still in the kind of early stages of understanding the impact it will have on their business, noting that a 1 to 1.5 week delay in Model 3 production in China should be expected due to a government-required factory shutdown that they state may slightly impact profitability for the quarter. But if you couple that with the seasonality effects of the first quarter, it could potentially affect them in a more meaningful way. Don't forget that China's economy is also struggling pretty bad right now as well. But with all that said, is Tesla stock currently in a bubble? Well, when I consider all of the different ways that Tesla is disrupting these legacy markets and how much potential I think they have in the future and how much massively larger I think that they will continue to get as a company over the long term, well, in my personal opinion, it's just my opinion, but no, I don't think that Tesla stock is in a bubble, at least not yet. Now, is the stock expensive? Well, I think you could make that argument, and I wouldn't even necessarily argue with you on that, but is it an actual bubble to the point where the Tesla stock needs to crash by like 50% or 80%, or who knows, maybe even more depending on like who you're talking to? Well, no, I don't really think so. Now, I'm sure that there are some like overly optimistic short-term traders getting in on the stock because of all the hype, and they're just kind of trying to make a short-term profit rather than actually investing in the company long-term. But overall, I think that Tesla trades for a premium mostly because of how far ahead they are than the competition in markets that are adapting very rapidly to electrification and autonomy, and Tesla is ahead of everyone else. And that's why I think that they mostly command a premium. Now, can the stock still go down? Well, of course it can. Anything can happen in the short term, and there's certainly a lot of things that could happen here. Tesla could make some fundamental mistakes themselves. We could have some issues with profitability on product ramp-ups and things like that. And we know how the media loves to kind of spin those events. Because Wall Street is so kind of trigger happy on these type of stocks, especially Tesla, that is so like polarizing. We know that little kind of events like that are just kind of short-term speed bumps can definitely affect a stock like Tesla. So we could see little sell-offs, and of course there's also the whole coronavirus thing going on, and that could spark even a small sell-off just in the broader market overall. But I think that's really where Tesla will probably see the biggest dips, is where the overall broader market just kind of drags it down, maybe like on a healthy correction or something, which I do think that we're overdue for, because this market can't just keep going up and up. So in terms of Tesla though themselves making too many fundamental mistakes, well, I think they have so much future potential that as long as they can just kind of keep executing like they're doing right now, I think they will be fine. But again, I think the biggest dips will probably come from broader market kind of sell-offs, and that just kind of dragging Tesla down a bit. Now, am I personally buying any more of the stock at these levels? Well, no, not really, because, and I always say this in my videos, and you're probably sick of hearing it, but, I already have the position built out that I mostly wanted to have. It's a decent sized position, and I'm up a lot on it. So do I really want to mess with it too much? Well, not really, but, if there are some kind of dips in the market, those will probably be the times where I'm willing to add to my position on any kind of corrections or things like that in the overall market. And anyway, with that said, I'm definitely not even considering selling, because this is just a type of stock that has so much future potential that I'd rather just take the risk of losing everything rather than selling out a little bit here and cashing in some profits just out of fear or anything like that, because I'm scared of that, people will be taking profits and the stock will sell off. I'd rather just take the risk and hold it long term, because it's that kind of company that just has so much future potential. I'm really just thinking long term. Now, having said all of that, the question that I always get asked in my videos now is, well, if you weren't already in the stock, would you be buying it? And that's a really hard question to answer, especially with a stock like Tesla. Personally, if I wasn't already in Tesla, I do really like them. So if I wasn't already in Tesla, I think maybe I would buy on like a little dip. I'd probably buy like a small, like a tiny amount on any kind of little dip here, maybe like with the coronavirus thing going on, maybe if that causes a little sell-off, maybe I would buy a small position, and then I would look to really add much more significantly on bigger sell-offs, and like probably caused by the market. So if there's like a big market correction, that's where I'd probably look to build a bigger position in Tesla. But at these levels, it'd be pretty hard for me to want to buy a large amount, knowing that it's climbed by so much. And maybe that's just kind of a mental thing, but it's something that is in my head, so I have to be honest about it. Anyway, those are just my personal thoughts and opinions. Not telling you guys what to do. Always do your own research and make your own decisions. But I hope that you guys enjoyed the video, and if you did, make sure you hit the like button. Really helps the channel, and I'll catch you guys in the next one. By the way, leave your thoughts and comments down below. I'd love to read them and respond to them. But thanks again. I'll see you guys later. Bye-bye.